And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it's Monday as we kick off another week in the month of June, and I can't tell you what's higher, inflation or gas prices. I mean, it's just pretty much about the same at this point. And the temperature, that's right. So it's all moving up there. There's actually an interesting, the old joke. It's, inflation is so high. You're supposed to say, how high is it? How high is it? It's so high, the IRS is actually changing the mileage calculation. They're actually increasing the deduction you get for mileage this year. It's a very rare.
Yeah.
It's a very rare mid-year change for the IRS, but even the IRS has to adjust your cents per mile. So if you deduct your mileage, the IRS has now moved that up a little bit here to adjust for inflation. But that adjustment isn't keeping up with the price of gas. It's just all out there.
Here's your sign.
Yeah, there's not a lot of good news this morning, unfortunately, and I hate to start your morning off with just bad news, but that's pretty much all there is this morning. Inflation, of course, came in a lot harder than expected on Friday. That's really took the markets down sharply on Friday, and markets are not back to where they were, at their previous lows, but they were very close on Friday at those previous lows. This morning, we're going to break those lows. The S&P slated open down about 82 points. The Dow is going to be down about 500, and the NASDAQ will be down about 300 this morning. So, again, a lot of concern here because that inflation was higher than expected than the latest CPI print on Friday. Now, a couple of things about this, though, are that the indicator that is used. So when we look at inflation as a measure, the largest percentage input into that gauge is homeowners equivalent rent, and that's this mathematical calculation that the government put together to measure, the value of homes. Now, it used to be they used the actual just price of home price increases. Then they changed it to this kind of measure of homeowners equivalent rent, and it's kind of an iffy measure. But the important thing is that it lags what's going on in the housing market by about 3 months or so. So when we take a look at the homeowners equivalent rent, that is still moving up. But if we take a look at real rental rates and expected rent rates going forward, those have actually peaked and started to decline here a bit. Now, the reason that that's important is because when we look at inflation, over 40% of CPI is strictly homeowners equivalent rent. Gas prices, energy prices are a very small percentage input into CPI. So despite the fact that gas prices are high, it doesn't have that big of an impact on CPI. Food and those type of things, they make up about 15% of CPI. So food prices do impact CPI, but the real thing that impacts CPI is homeowners equivalent rent. So if we begin to see rent that catch up with what's going on with rents peak out and start to slow down as people can't afford to pay higher rent, then we're going to start to see inflation coming down. So while we may not have seen the peak of inflation just yet, we're very likely close to this. I mean, we're still flirting with the previous peak, but over the next month or two, we're still probably going to see that rate start to come down. And again, that'll take some of the pressure off the markets. But again, this week, the big concern for the markets and why the markets are having such a big problem right now is because that really strong CPI print scared the market that the Fed might hike 75 basis points on Wednesday, which is the FOMC meeting this week. That is what's the big concern here. The Fed moving too quickly here, tightening monetary policy, hiking rates too fast. That is a huge risk. And that's one of the things that has been weighing on markets as we go forward. And so this print on Friday is what is really weighing on markets because of the expectation the Fed will now have to be more aggressive in terms of tightening monetary policy, hiking rates, reducing their balance sheet. And, as the old saying was over the last couple of years, don't fight the Fed when they're doing $120 billion worth of QE every month. Well, just as likely, don't fight the Fed when the Fed's hiking rates and tightening monetary policy, taking the punch bowl away, because that's what's going on here. Then Friday, we have that $3.2 trillion options expiration. So on Friday of this week, that's when all those option contracts expire. And so positions are going to be bought or sold, depending on what side of the contract you're on, to roll those contracts out for another month. So again, there's going to be a lot of volatility this week. Doesn't necessarily mean it's going to be all negative volatility, but there's going to be a lot of ups and downs this week. Now, one of the good news, if there is good news to tell you about this morning, last week markets were down 5.2%. That was a big drop for 1 week. Historically, when we see these very sharp declines in 1 week, you typically get a little bit of a reflex here, and that wouldn't be surprising. This morning, we're going to open down right at the bottom of the trading range. That's going to be where we start to get kind of some of that more extreme oversold condition on a short-term basis. That's going to set you up for at least just a smidge of a reflex rally here. Use that to sell into, because again, we're just now, and this will happen today, we're going to, that buy signal that we got just a couple of weeks ago, which was a long time coming, is now going to flip back over today, and we're going to go back onto a sell signal. So again, all that work that we had over the last couple of weeks, and we talked about selling into it, and if you follow our trading at simplevisor.com, we've been selling over the last couple of weeks, adding a short position, raising some cash. I wish I would have done more, but we'll get some more done here. But yeah, so any rallies here, continue to raise some cash, and replace hedges, because again, there is a real risk here now that over the course of the next month or two, we could see a bigger decline in markets. And again, markets have already been beat up a lot this year, I know, but there is definitely some more downside because of what's happening between the Fed and what's going to be happening with the economy. Again, we're starting to see more and more indicators now that are suggesting a recession will arrive sooner than a lot of people expect. And already the Atlanta Fed GDP now is at 0.9%. That's likely going to fall further before we get to the end of the quarter. And moving into the third quarter, that's likely going to get even weaker because of the impact of both inflation and higher interest rates, and the fact that real wages aren't keeping up with the cost of living. So individuals are going to have to make decisions to curtail spending, and that's going to slow economic growth. Now, this is what the Fed wants, mind you, because that will bring down inflation. So this whole inflation thing we've got going on right now is going to decline. It's just a function of timing. So it's again, between getting here and there. One of the other areas that's under a lot of deflation at the moment, I thought this was interesting this morning, Bitcoin is down fairly sharply, about 25% over the weekend. It's been a bloodbath in Bitcoin and particularly Ethereum as well. These are those cryptocurrencies. And, we talked about before, when you talk about cryptocurrencies, a lot of people are like, oh, it's a hedge for inflation. It's going to be a replacement for gold. It's going to be a replacement for currencies. It's not doing any of that. It's not hedging inflation. The dollar continues to strengthen. Bitcoin and cryptocurrencies continue to weaken. So whatever the theory was behind cryptocurrency, and it's going to be its replacement as a store of value in the world, has not worked out that way at all. Now, maybe it will eventually here as we get into Web 3 or maybe even Jack Dorsey's Web 5. But you're going to have to get into some form of cryptocurrency utilization where that value is ultimately redeemed. I'm not saying there's not a future for cryptocurrency at all. I'm just saying that at this point, it has not done what was widely expected by individuals. Okay, quick break. We'll come back. Lots of stuff to get into this morning. You're listening to The Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Hurricane season is here, and along the Texas Gulf Coast, we know how to prepare. What we don't always know is which way the storm will go, and if a hurricane does come your way, whether your house will flood. Fortunately, you can get flood insurance. Unfortunately, flood insurance rates have skyrocketed. Don't be at risk. Let the specialists at RIA Insurance assess your needs and shop your coverage for the best rates possible. Another service from realinvestmentadvice.com. Click on the insurance tab, realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Could your job still be at risk? A new normal can still include new obstacles. A severance package can be an emotional as well as a financial decision to consider. Wouldn't it be comforting to review the options for you and your family with an objective financial partner? At RIA Advisors, we're here to help. From severance pay, tax timing decisions to how to maximize unemployment benefits, the RIA team wants to make sure you can do what's best for your family. There's no charge for a consultation, so reach out to RIA Advisors, 855-RIA-PLAN, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. I'm your host, Lance Roberts. So as I was saying, there's just a lot of pressure at the moment on markets just because of inflation and what's happening in terms of prices in general. And there's a country western song that goes, scratched off a lottery ticket, won $100, then he buys 2 cases of beer and he buys a tank of gas. And it's a good day, right? It's a great day because he's got this $100 scratch off. He's able to buy beer, fill up his truck, and it's all good. And so there was a couple of TikToks over the weekend of guys, doing, kind of going through the lyrics, going in, they're filling up their truck, and it's like $98 to fill up their truck. And they're like, I've got no money left for beer. And and that's just kind of the reality of what's settling in. But this has a lot of consequences. President Biden's approval rating right now is at the worst level on many polls, is now at the worst level on record in many cases. And even in some of the more left-leaning liberal polls that tend to support the Democrat-type candidates, those you just can't hide the fact, right? I mean, it's just inflation is eating up everybody at this point. Interestingly enough, kind of the big shopping thing right now is peanut butter. Can't get peanut butter. And I don't care. My wife loves peanut butter. That's one of her things that she likes, and which is interesting because she used to hate peanut butter, and then she got to this phase where she really loves peanut butter. So now you can't get peanut butter. And so we go to Costco over the weekend, and she buys this Kirkland brand, HEB. It's Kirkland's is the Costco brand,
Right.
but it's and she goes, oh, I found peanut butter. She throws it in the cart, and I go, babe, you do realize that's organic peanut butter? She goes, yeah, but it's peanut butter. It'll be fine. And of course, when you buy stuff at Costco, it comes in bulk, so it's 2 jars of peanut butter. Now they're not huge; they're not like 5-gallon buckets of peanut butter, but there's
Got enough for a platoon.
No, and it's just 2 regular jars of peanut butter, but it's labeled organic. And I was like, babe, that is organic peanut butter. She's like, it'll be fine. Don't worry about it. I'm like, okay, fine. I'm not gonna worry about it. Now, I know from experience, organic peanut butter sucks. Okay, but I let people live and learn. That's the thing. And so she comes home, she cracks open that can of peanut butter. She looks at it, she goes, this doesn't look like regular peanut butter. I go, it's organic. And she takes a big spoonful of it, sticks a spoon in it, throws the thing in the trash can. I was like, what's wrong with it? She goes, that's the worst peanut butter ever. And I go, yeah, there's no sugar in it. Organic peanut butter is literally salt and peanuts. That's all it is. Mm-hmm. And if you've ever had organic, and I know there's people, I know. There's some of you out there going, I like organic peanut butter. Okay, you're weird, but it's okay. Everybody has their thing.
You can mask it with sugar-infused jelly.
That was her mom's solution. Mix it with honey.
Yeah.
And a lot of jelly. Peanut butter jelly, it'll work fine. Yeah. Gotta get the sugar back in peanut
Nobody will know.
So anyway, but this you can't get peanut butter. You go to the store and it's all sold out. But there's just a lot of stuff that's still not on shelves and a lot of things that are still sold out and you can't get it. And this is, frustrating people, first of all. And then when they do check out and their bill is quite a bit higher, that's more frustrating, particularly when they're trying to make ends meet. And so not surprisingly, if they're asked how the president is doing, how do you feel the president is doing with the economy? The guy in charge gets the blame. And it's not, and let's be clear, this is not President Biden's fault entirely. Some of it is. But some of this is President Trump's fault. And some of it goes back to Obama's fault. And some of it goes back to Bush's fault. And we can go all the way back through history. And we make decisions that lead to outcomes, but these decisions don't always show up right when we expect them to happen. So to say this is all President Biden's fault is not fair because a lot of the economic shutdown and the first stimulus checks and the massive Fed interventions by, the Federal Reserve, that happened under the Trump administration. And so, but it just took time to show up in the economy. So, that we always have to think about these things. And, it's always interesting if you take a look at stock market returns, they always, over history, you'll see that stock market returns tend to be better under Democrat presidents than they do under Republican presidents. But then if you go back and overlay where recessions occur and where, crisis events occur, those happen underneath more often than not Republican presidents, not because, they're the guys that did it. It's they inherited the setup from the previous president, which in a lot of cases happen to be Democrat because we flip-flop back and forth, right? We go Democrats, Republicans, Democrats, Republicans. Good example, Bill Clinton, Democrat president, did a whole lot of things that led up to the Enron crisis, dot-com crisis, et cetera. That was all inherited by George Bush. So, again, that's just kind of the way these things occur over time. Policies take time to go through the system, but whoever happens to be the guy in charge, this is why you got to be careful if you're going to run for president, don't do it when things are really good because you're going to get all the bad stuff when it comes down. But that's just how it works out. So, these polls are great, and unfortunately, we kind of blame the guy in office. And look, I'm not giving Biden a free pass here because he's made a lot of bad decisions that have exacerbated the situation we are now. We already done a bunch of checks. He wanted to do, and he did more, right? And that just made things even worse in the midst of a supply chain shutdown. So, those are decisions that were made. Restricting oil and gas permits, shutting down the XL pipeline, these type of things. Those were decisions that led to a oil supply shortage and high oil prices, which are now feeding through to gas prices. So those were his decisions. He gets that blame, right? So my point here is that we can't blame inflation entirely on one person, but it's just what Americans are dealing with right now. And that sentiment is showing up everywhere. The University of Michigan Consumer Sentiment Index, which came out on Friday, is at the lowest level on record. Now, think about that for a moment. The University of Michigan Consumer Sentiment Index, they go out and they ask people, how do you feel about the economy, investing, other stuff? And they get this sentiment survey. And so they weren't asking people, how do you feel about the economy? People feel worse today about the economy than they did at the depths of the financial crisis. Now, think about that for a moment, because in the depths of the financial crisis, people are getting kicked out of their houses, right? They're losing their jobs left and right. They are, just being crushed at every corner. And yet, sentiment is worse now. So, now there's some good news behind that as well, is that the one good thing about having, vastly negative sentiment is that it's also where you're near market bottoms, ultimately. Now, it doesn't mean today or tomorrow or next week, but this is where you start to try to fish out a bottom, because everybody is so negative on everything at this point that they are simply, can't get any worse almost at this point. So, there's some upside here that, we may be getting closer to the bottom of this, situation. But again, it feels like right now, at least from an inflationary standpoint, that there's just no end in sight. Inflation is just going to keep going up. Things are going to keep getting more expensive. And, I just can't, this just is never going to end. And that's the way that as humans, that's the way we always respond to things. Things can only go in one direction, and they're going to go that way forever. But that's just not the way things work out. These things will change, and we don't know exactly why they will change or when they will change for certain, but they will. With an absolute guarantee, in the next year or so, we're going to be talking about much lower rates of inflation, much slower rates of economic growth. We're going to be talking about a reversal. We're going to be looking at a Federal Reserve trying to figure out how to start QE again and drop rates back to zero. We're going to talk about probably whoever's elected, into office is going to be talking about how to get more checks to households or whatever it is, right? But we're going to be on the other side of this coin in late this year or next year. And that's just a function of how things work. And the important thing is that inflation doesn't moderate. This is a big point that we need to be aware of. Throughout history, inflation doesn't run up slowly and then just stay there. Inflation spikes up because of events in the economy and then crashes. Oil prices spike up and then crash. That's just the way those things work because of what they do to the economy. You get spiking inflation, you're going to cause a recession. In fact, I just did a chart in this weekend's newsletter. So if you go by the website, realinvestmentadvice.com, and click on the newsletter link under the Insights tab, you'll get our latest newsletter. And I put a chart in there showing inflation going back to 1960. Every time that inflation was above 5% on an annualized rate, which we're well above that right now, 8.5 as of the last reading, you've had a recession. And inflation falls below that 5% rating pretty quickly thereafter. So again, we're going to have a recession. It's just a function of time now more than anything else. And the only way we avoid a recession is by some stretch of a miracle that, we can all of a sudden solve supply chain problems, get oil prices back down to, $40, $50 a barrel. There's just, and none of that appears, those solutions, those remedies do not appear to be on the horizon. And as such, the risk of a recession is almost assured. It's just a function of time. Now, does that mean it absolutely has to happen? No, I'm not saying that. But it certainly seems that way when you take a look at a lot of the economic data. Okay, quick break, be back right here on The Real Investment Show. Don't go away.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I priced out putting solar panels on my roof. I was curious to see if I could really save some money. It was going to be like 60 grand, including a tax credit, to put panels on my roof. And so I calculated it out. It would take me like 32 years to get my money back.
The Real Investment Show podcast.
That's great, but the things we're providing tax credits to are super expensive things that only rich people can buy.
At realinvestmentadvice.com.
You know, somebody making 30 grand isn't driving a Tesla.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com. Enhance your financial success with RIA Advisors' free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com.
You're listening to The Real Investment Show.
So, you know, we talk a lot on the show about why it's important to take care of your health because, you know, it's great to have money. It's awesome, right? You retire, you got a big fat nest egg, it's awesome. And then you spend your entire retirement in the hospitals and all your money on medical bills because you didn't take care of yourself. And, you know, now you're suffering from the all kinds of ill effects of, you know, bad choices. And as we've talked about on the show many times, our good friend Keith Klein had a very simple saying about taking better care of yourself, which is just make better bad choices. Was, you know, so in other words, if you're going to eat a hamburger, right? Just eat it without cheese. Make better bad choices. And that's kind of stupid to have a hamburger without cheese, but hey, you know.
Or bacon.
Or mayonnaise, or, you know, a lot of other things.
Condiments.
It's all the bad stuff that makes it taste better, right? But anyway, his point is make better bad choices and you can start to do better with your health. And I thought it was easy. I thought this was good, you know, kind of a good segue this morning because McDonald's is going to help you with that.
Oh?
Yeah. But actually, no. They're not actually. You know, McDonald's was trying to give people some better, healthier choices.
Some better bad choices.
Yeah. They were going to add some healthier menu items. Mm-hmm. And they added those healthier options so you could, you know, make some better bad choices when you go to McDonald's. Problem is that when people go to McDonald's, they're not looking for healthier options. They're going to McDonald's for McDonald's. McDonald's has now cut their nutritious foods from its menu, such as salads, grilled chicken sandwiches, and fruit and yogurt parfaits. They move to streamline operations, offer faster drive-through times, and increase profitability for things that they sell more of. So So, if you're going to McDonald's to look for something healthy, look somewhere else because it's not going to be there. McDonald's isn't my first choice for a salad, by the way. Just
saying.
Just saying. But yeah, so anyway, but this part of this is also due to inflation and input costs and those type of things. So, they're trying to make this move towards profitability. And we've talked about this before is that, particularly with restaurants, what they're going to have to do is start making choices. Labor cost, of course, for employees continues to go up, particularly in the restaurant space. In order to get employees, restaurants have been forced to pay more to actually get employees to come to work for them. And employees at restaurants are notorious for job hopping. They'll jump from one job to the next because for them, it doesn't matter what restaurant they work in, if they're being a waiter, waitress, waiter, hostess, whatever. Those jobs are plentiful and they can just jump from one job to another pretty quickly. They don't care. They just learn a new menu and keep going. And if somebody's willing to pay them more at that wage bracket, there's really no loyalty to the companies. So they job hop pretty regularly. And this is one of the things we talked about with job openings. When you take a look at these job opening surveys, a lot of those jobs are in those areas that have a lot of high turnover. Because why am I going to take my job posting down? I put a job posting up, says, hey, I need a hostess for my restaurant. And, I should say host. We should be politically correct here.
Got to be inclusive.
Yes. I need a host for my restaurant. And I know that as soon as I hire that person to do that job, that, very likely they could quit. So I just leave that job posting up all the time. And, if people call me, I'll, take their resume in and say, yeah, we're probably going to be hiring here for that job pretty soon. So that job opening stays up all the time. And that's one of the things that when we take a look at job openings, we have to discount some of those job openings because of that type of environment. But again, as restaurants are seeking to increase profitability, they've got to, and this is kind of one of the fallacies that kind of moves through the system around a lot of things. We've heard Congress kind of going after oil companies, right? We need to rein in they're just making all this money on oil and gas because, they're just raking in the profits. Really, no. Their profit margins haven't changed that much because of higher oil prices. Yes, they've gone up some. But we have to remember that as oil prices go up, so do all the input costs. They go along with that. And we see that impact across a variety of industries. The housing industry is a good example. Cost of lumber and copper and everything else that goes into a house. Those prices go up, cost more to build a house. I can only charge so much for the house. So that eats into my profit margins. And the cost of labor goes up. And we see this really across industries everywhere, that it's not just a function as prices go up, everybody gets rich because people are able to sell stuff at higher prices. And because all those input costs are going up at the same time. And that impacts those profit margins. So between wages and the cost of goods and products and services that you outsource, all those type of things, companies are having to make these decisions in order to bring down their cost in order to maintain profitability to make Wall Street happy, right? And this is one of the things that we've seen in recent reports. There have been 10,000 mentions, over 10,000, of inflation in the earnings reports. As these companies have been reporting earnings, there have been over 10,000 mentions of inflation. Not surprising, because they're reporting, hey, our earnings were this in the last quarter, our revenues were this, and the reason we didn't make as much as we expected was because of inflation. And that impacted our earnings and our revenues and our profit margins and all those type of things that they report on, of course, and that's why we've seen a lot of stock prices, come down, but we've seen some of these companies just get blasted when they report earnings, and they're down 20, 25, 30% because they missed earnings. And it wasn't because they missed earnings as much as what it was they said about the next quarter and the quarter after that. And all of a sudden, those major growth rates that these companies were railing off over the last 2 years evaporated because of both a slowdown in the economy plus higher input costs. And so we've seen that reflected in a lot of these companies. But this is the impact of inflation working through a system. Now, this all breaks stuff. And this is the important thing. As we talk about inflation, as we said earlier, inflation tends to spike up and then it normally crashes very quickly because something breaks. Inflation doesn't fix itself by itself. Inflation breaks things. And when something gets broken, that's when all this corrects. In fact, Goldman Sachs just recently was talking about that the central banks, the Federal Reserve and European Central Bank as a function, appear to be set to break some things according to their title. And what they're talking about here is that the Fed is set to hike 50 basis points this Wednesday. I suspect, there's a lot. One of the reasons the market is, really kind of off its base this morning in particular is because now with that inflation print on Friday, the markets are concerned the Fed could hike 75 basis points on Wednesday. The Fed's pretty much already taken that off the table previously, and they've not made any mention of that over the course of the last 3-4 weeks heading into this meeting. There hasn't been any leaks. There hasn't been anything else that they might hike faster. So I suspect, and the Fed normally doesn't do stuff to shock markets, particularly when markets are already weak. So I would suspect that they're going to hike 50 basis points on Wednesday. Now, on Wednesday's meeting, they could become a little bit more hawkish in terms of their context, talking about where we are with inflation and kind of their outlook for inflation over the course of the next several months, and set up for a 50 basis point hike at every meeting through September. That wouldn't be surprising at all. That's actually, if that's the case, that could actually be a bit of a positive for the markets. Markets have already kind of predicted and have already priced in 50 basis point hikes at this meeting, the July meeting, and the September meeting. So if that's really what comes to fruition this week in the Fed's fight against inflation, that could actually be a positive because that's already kind of priced in. The thing the market's worrying about, and the reason markets are down this morning, is they're worried about an even more aggressive Fed policy than what was expected previously. And it's not, of course, just the Federal Reserve here. It's also the European Central Bank. It'll be interesting to see what the European central banks will do anything attitude in terms of monetary policy does in the face of 8% inflation. I have a strong suspicion that Christine Lagarde may be having a bit more of an issue with monetary policy than she's letting on right now. There's also some other issues. Again, we've got a big expiration on Friday, but fund flows into markets have been very terrible. Liquidity is very weak at the moment. And this is all kind of exacerbating this inflationary impact that is currently weighing on markets. So again, a lot of stuff to talk about, over the next few days. And on Wednesday, as I said, we'll get the Fed policy. Then on Friday, we've got options expiration. Then at least after that, we've got a little bit of a break for markets to take a breath and kind of factor all this stuff in. So got to get through this week. It's going to be volatile. Try not to make any mistakes here driven by emotion. There's not any good news right now. There's no good news out there at the moment. So be careful not to let emotions override your strategy. Be right back after the break, wrap up the show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Hurricane season is here, and along the Texas Gulf Coast, we know how to prepare. What we don't always know is which way the storm will go, and if a hurricane does come your way, whether your house will flood. Fortunately, you can get flood insurance. Unfortunately, flood insurance rates have skyrocketed. Don't be at risk. Let the specialist at RIA Insurance assess your needs and shop your coverage for the best rates possible. Another service from realinvestmentadvice.com. Click on the insurance tab. realinvestmentadvice.com.
What worries you about your money? Enhance your financial success with RIA Advisor's free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
Just kind of looking at futures this morning. Futures were down 880 on the Dow this morning, or down about 547 at the moment. Still not good, but better than a sharp stick in the eye, as my mom used to say. We'll see kind of how markets open up and trade today. West Texas Intermediate crude down about $2 this morning as well. So again, we'll kind of see how things trade out today. I think this initial open might be the low for the day. We'll see. So again, try not to panic sell, anything right at the open. We could very well open down, have a bit of a bounce, then sell back down to lows again today. I mean, there's a lot of angst about the market. So there's a lot of people wanting to sell right now. So just be careful, how you enter into the markets and what you do. Now, again, nothing wrong with raising some more cash here at all. There's certainly, like as I said earlier, there's not a whole lot of good news at this point, particularly this week. And again, there's going to be a lot of volatility. So you may well sell some today and markets rally tomorrow, that type of thing. But whatever rallies we get, those should be sold into as well, again, until we get some better clarity. Then that's really the biggest problem for markets right now, is just a lack of clarity. Nobody knows where we are. There's so much bearishness in the market, but as we wrote about this last week, markets are incredibly bearish, right? Sentiment is very bearish, but allocations by retail investors are still near highs. They haven't sold anything. And part of this is due to the reality that we've trained investors to expect the Fed to kind of bail out all the problems. So nobody wants to be out of the market in case the Fed shows up tomorrow and says, hey, never mind, we're back in, right? We're not going to hike rates. We're going to do QE. And they don't want to be caught flat-footed and this market take off and run screaming, because that's what they've been trained over the last decade. Remember, most investors have not seen a bear market. And this is kind of an interesting dichotomy of what happens with bear markets. After the 2001 and 2 bear market .com crash, a lot of those investors never came back to the market. The crash that occurred in 2008, a lot of the retail traders today were wet behind the ears. They were under 18 when Obama was elected into office. And the only market they've seen is a market that just goes up every year. So a bear market, what's that? I've heard about them, but I've never been through one. Well, welcome to the big leagues. You're now in a bear market. Now, the question is, of course, is where this ends, as is always the case, and we've got to work through that. But as we've said before here on the show, bear markets don't end with everybody wanting to buy them. And right now, everybody's trying to look at that bottom, and everybody's trying to hold on to stocks because they're just waiting for this bottom to occur. We're not there yet. So while sentiment may be very negative, we don't have what's needed in terms of equity allocations, etc., to suggest that we're near a bear market bottom yet. We'll see. Every bear market is different. The way they start, the way they end, and everything in between, they're always different, but the outcomes are always the same. We're talking about inflation a lot this morning because it's such a key point of everything in the markets right now. Fed policy, attitudes, sentiment, voting, everything, right? Inflation's driving everything right now. And I thought it was interesting because remember in 2020 when the government launched the CARES Act, which, by the way, the Government Accountability Office has now done their study of the money that was spent on these PPP programs, these payroll protection programs. And this is where everybody was going out and applying for payroll protection money and saying, I need money for my employees. Well, a lot of people were going out and just forming fake companies to get PPP loans. In fact, there was a hedge fund manager that just got busted, and he's now going to be serving quite a few years in prison for millions in PPP loans that he got completely fraudulently. I mean, and that a lot of that stuff happened. In fact, the Government Accountability Office just found out that 20%, one out of every $5 in PPP programs were fraudulent. Now, interestingly enough, this is exactly what we said would happen when this came out. We said, look, when you're just going to throw out these programs, and this is a problem the way we do things with the government. It's like, oh my gosh, we've got a crisis, got to throw money at it. But we never put the mechanisms in place to do these. We just go, this sounds like a good idea. Let's just go throw money at stuff. Humans are really good. They say if you ever want to build a foolproof system, hire a fool. Because people can figure out how to mess up anything, right? It's like you say, I've got the perfect gadget, right? And this is a indestructible gadget, and somebody will destroy it. That's why we have warning labels on everything. Did you hear about Geico over the weekend?
No.
Geico just lost a lawsuit for like $6 million.
Wow.
Okay, so Geico's, in fact, we had one of our commenters on our YouTube page this morning that says, hey, good news, I just saved 15% on my Geico insurance. So yeah, Geico got sued over the weekend because a lady was having sex in her car with parked car. She's having sex with a guy in a parked car, catches a sexually transmitted diseases, sues Geico and wins, saying her car insurance should cover her catching an STD. Now,
man, I want that lawyer.
But this is why we have labels on stuff that make no sense, like don't use a hairdryer in the shower, those type of things.
30 years ago, your automobile manual used to provide all kinds of information like how to set the valves and the gap clearances on your spark plugs. Today's manuals tell you not to drink the battery water.
That is correct. Because people do stupid stuff. You remember the whole lady that sued McDonald's over the hot coffee?
Yes.
And that's why you have labels that says
hot
coffee.
It's called McDonald's Hot.
I know. It's just, but this is why you have all these stupid warning labels. But yeah, so Geico loses $6 million on this lawsuit over, and it's completely stupid. I mean, but there you go. Now, now there will be a rider in your Geico insurance. If you want to have extra coverage for having sex in your car, you too can pay for that.
There you have it, with a 15% discount.
With a 15% discount. But This is the stuff this is the problem of where we are in society, right? And that's what I'm saying is like, if you can figure out how to break something, people will do it. And that's what happened with PPP loans. We just throw this money out there and we say, oh, everybody will just be honest. I don't even want to know what they say on YouTube right now.
He says, yeah, but the unbreakable comb is still around.
That is true. But, we just throw money out there and then we just go, oh, everybody will be honest, right? Nobody's going to cheat the system, right? This happens all the time, right? So 20% of these PPP loans now fraudulent. But when we threw all this money out there, and back to my story here before I run out of time. So we threw all this money out there in the CARES Act and we gave all these checks to households and we shut down the economy so nobody could get anything. People started buying just random crap at the store. I mean, just you go to the store and shelves would be empty because people were buying. They're like, I don't know if I need that, but I'm going to buy it anyway just in case because it might not be here tomorrow. Except for the Beyond Meat stuff. You could go at any time and get all the Beyond Meat you wanted. Nobody wanted that crap. But all the other random crap people wanted, right? People were buying the stuff out. Interestingly enough, because of where we are now, the demand for random crap has now ended. And we have now seen, and we talked about Walmart and Target, but here, let me run through a few stores for you real quick here. I thought this was a very interesting expose of what's going on with the random crap problem in America right now. Now, this is the percentage change between quarter one of 2021, quarter one of 2022. Now, we just finished second quarter, and we're still reporting on that, but this is year over year, quarter one. Inventory at Walmart up 32%, sales up 3.9%. Now think about that for a second. Amazon, inventory is up 46.7%, sales 7.5%. Home Depot, inventory 31.92%, sales 3.75%. These are increases. Costco, inventory up 26%, and this is why we still own Costco. Sales up 16% at Costco. Now, see, that number, pay attention to that number. That's why we own Costco. Inventory at Walgreens up 4.75, sales up 14%. Target, inventory up 43%, sales up 3.9%. Now remember, Target, Amazon, Walmart in particular are the ones that noted in particular a inventory problem. But it's not just those. Lowe's, inventory's up 10%, sales are down 3.1%. Best Buy inventories up 9%, sales are down 8%. Dollar General inventories are up 19%, sales are down 4%. TJ Maxx inventories up 36%, sales are up 13%. So the point here is that there is now inventory builds across the retail sector. All that demand that was created by sending checks to households is now gone because that money's gone. They've spent it. Now they're having to turn to credit cards in order to maintain spending. But that spending is simply just trying to buy the stuff they need to live from one month to the next. That's gas, that's food, that's paying utility bills, that's paying the rent or the mortgage. That problem is not going away. Taxes are going up. Homeowners insurance are going up. All those things are going up. Those costs are going up. Wages not keeping up with those price increases. All right, that wraps up the show for the day. Stick around. We've got 3 minutes on markets and money coming up. We have our sector by sector analysis this morning at simplevisor.com. So if you go to simplevisor.com, you can register for free for 30 days. You can get our sector analysis report. We go through each of the major sectors with both buy and sell stop levels for each of the major sectors in the S&P 500. That's on simplevisor.com right now. Also, our latest reports, our newsletters on the website, realinvestmentadvice.com. It's all there for you. Send your questions and comments. See you back here tomorrow.
It's a rich man's world.